Hey everybody, welcome back to our weekly podcast. My name is Patrick Tan, the General Counsel for ChatArgos, the blockchain intelligence firm that brought you such hits as the BUSD under collateralization. With me, as usual, every week, our CEO, Chief Data Scientist, Jonathan Reiter. Thank you for tuning in. Thanks for joining us. Thank you for all your comments, likes, and subscribes. We do apologize that we can't always get to all your comments in time, but, it is what it is. So this week's episode, what are we going to talk about? We're going to talk about the Canto RWA Debacle. Let's just check out what's going on over there. We'll talk a little bit about custody because I know that's been making the buzz around with Galois Capital and how they had used Fireblocks as their official custodian, except that Fireblocks is not a custodian, but we'll get to that shortly. And THORChain, which is a new piece of research we just put out. I wouldn't really call that research, though. It's kind of like, stating the obvious.
Reading. We did reading.
We did read. I've been told I do know how to read at least a fifth grade equivalency. So
sufficient in this case.
Anyway, so I'm going to jump straight into it. I'm not super clued in on the Canto RWA debacle, but, guess who's got all the dish? John, tell me a little bit more about that.
So Canto is a blockchain with a lot of problems. So you can Google this one, but it's been offline, back online. Parts of the system remain offline. The Explorer half works. It's a blockchain that struggled. It's a Cosmos ecosystem chain. It's EVM compatible. Okay. What's interesting here is that the setup there included a native algorithmic stablecoin note. I don't think they would call it algorithmic. They would call it over-collateralized, whatever. There's a procedure. And it's somewhat clever in that the peg is maintained by adjusting the interest rate. You can only borrow it by posting collateral, and then they increase and decrease the interest rate based on whether it's trading above or below the peg.
Okay.
Fine. So that mechanism is got the typical can-work equilibrium solution, doesn't work perfectly, whatever. Now, what's interesting here is that those challenges intersect bridge-related challenges. So because when it launched, it was a new chain, native assets. People bridged over stablecoin type assets, interest-bearing stablecoins and money market fund type, whatever was bridged over, and then a lot of those things were pledged as collateral for this note stablecoin issuance. Okay, and then the bridge and the blockchain had problems. And
what kind of problems?
Well, went offline. There was a consensus failure. An upgrade didn't succeed, whatever. Okay. And then if you start to see assets withdrawn from other parts of the bridge, and in general, if the bridge isn't working, if your bridge is clogged, such as it is, what happens to the stablecoin if the assets that are inside aren't backed because they got withdrawn on the other side of the bridge? Because this process isn't working anymore. Right? So this one is very interesting because they've managed to mix together two separate challenges here.
Yeah.
So roughly speaking, what you've got is an over-collateralized stablecoin of the usual style.
Okay.
Collateral was bridged into the ecosystem.
Yep.
Posted to generate the over-collateralized stablecoin.
Okay.
And then the bridge and the blockchain started to have consensus and processing problems, and a bunch of the pledged-in assets vanished. So now you're in like a la-la land where presumably the tokens aren't worth anything, but who knows? All right.
Okay,
so you've been double impossibility here.
So would it be fair to say that if you were a gambling man, you might want to buy some of these things on the off chance that maybe they're backed?
It's interesting.
Like distressed debt.
Yeah, I mean, it's interesting because you've got a lot of trusted parties here in generating your supposedly trustless decentralized stablecoin.
The irony is that most of them were not trustworthy.
Wow. Well, so to be fair, the bridge failing actually has nothing to do with people being dishonest and untrustworthy. Software breaks.
Yeah, software breaks all the time. Yeah.
Right. So because you're really leveraging very hard on that. So we've talked previously about some of these newer algorithmic stablecoin designs, USDE and whatnot,
yeah.
where there's 20 different sources of yield, and they're all different levels and different amounts come from different activities. And of course, that also means there's 20 times whatever the flaws are in each, possibly ways in which the thing can catch fire. That hasn't caught fire yet. It will eventually catch fire. In this case, they leaned really hard on bridges to tiny blockchains. It's known as a challenge. Right? That's known as a thing that often catches fire. And they caught fire, and they just I don't see, they're not even trying to recover that hard. I will say that people should go to I think it's Canto Public on Twitter, and it seems like the official Twitter account's actually trolling the people who lost money in this debacle. The tone and the content of these tweets, it's hard to understand if this is a language communication issue, if the person is very strange, or if actually the whole thing was a rug pull scam to start with, or if they feel sorry, don't know how to apologize. They're a lot more like, haha, we're not online yet, but we might be soon. Too bad your money's missing. And you're like, what?
I mean,
is this a Google Translate problem, or what happened?
I don't know, it's kind of, I saw some of those, and it's an interesting way to treat. I mean, like, you didn't see Madoff go like, haha, burned all your money.
Here, it is conceivable that this was a genuine software issue, and they just haven't been able to recover the chain, and so everybody's
But you wouldn't taunt people like that if that were the case.
Fair enough. We don't even know what happened. It's just interesting to see such an aggressive realization of those sorts of problems fairly quickly. The note price did collapse from 1, flail around, and then move back up to 1. It's unclear if there's any real volume or who that isn't involved trading this in the first place.
I mean, if you recall when
it's like a $3-4 million market.
It's not huge, but if you recall when Luna blew up, there were still people trying to pick it up, like picking dimes ahead of the steamroller in the hopes that maybe it would repeg and stuff like that. You see stuff like that.
If they get the chain back running, and I mean, I don't know how long you can be just offline following a consensus failure on an upgrade, and anybody's going to use your thing again, but. When last I looked, I think the Explorer wasn't still running, but they claimed they were back up. It's. I mean, rarely is it actually a different form of collapse and explosion here. So this is a little bit different.
I had a stupid question. Does Canto short for something? Is it like short for Cantonese?
I no idea.
All right. Anyway, on that disappointing note, let's move on to something that I am not a professed expert in, but have some experience doing, is custody solutions.
I have written a fair amount of legal documentation for.
Yeah, well, that's also true. So I've had some experience setting up offshore funds, Cayman Island type funds and stuff like that. And one of the things that struck me as a little bit odd.
You got to set up the.
Correct. So I'm setting it up now, and so one of the things that struck me as a little bit odd is when Galois Capital got. I think it's fined a settlement with the SEC, and that they would pay back their investors, I think $225,000 or something like that, for using a non-qualified custodian. So, what's the issue with that, John?
Okay, so for certain types of fund structures, and Patrick will go probably in excruciating detail into different types of fund structures, you're required to have the assets held by a third party.
Yes.
That has the required licenses, which makes you a qualified custodian. What they mean here by not qualified custodian is some guy that's got your stuff but doesn't have any licenses. Right?
Yes.
I mean, my mother can hold my assets. She's not a qualified custodian, right? But she can hold a bunch of stuff. So what they mean there is not that the custodian he chose wasn't very good. What they mean is this isn't, really a custodian is a guy with a license. Otherwise, it's just taking custody in the colloquial sense.
Anybody can take custody.
Mean anything legal. You can just hold assets.
Yeah,
right? That's fine.
It's like when your girlfriend asks you to hold her handbag, you're the custodian.
You are the custodian of her.
Are you qualified? I don't know, man.
Well, don't lose those assets.
Yeah,
that could be a problem for you. So in this case, the custodian, and this is in fact on the SEC forms that the fund's required to file, was Fireblocks, and Fireblocks is a software provider. They provide software that helps with multi-party computation and whatever. Things that are kind of like custody, but they are not a custodian. If you speak to an employee of Fireblocks, they will continually remind you that they're not a custodian. I have spoken to people at Fireblocks.
The website
telling me that. It says that.
The website says that.
Yeah. You can say a lot of things about Fireblocks, but they are clear they are not a custodian.
In fact, they repeat it over and over again. We're not a custodian. It's on the website.
They will misunderstand your question and answer it with, we're not a custodian. And you're like, no, that's not what I was asking. Anyway, so it was surprising to both of us that this fund was organized as an onshore U.S. vehicle and had listed Fireblocks, which is not a custodian, as a custodian for assets that were in fact sitting on FTX, that blew up, money disappeared, whatever. And then there's been some discussion about how there is no alternative. Right? So what we really want to bring in some expertise here. In the case of an onshore U.S. and in much of the world onshore funds, he'll go into more detail, you're required to have third-party custody of assets.
Yes.
If you can't find a third-party custodian for asset X, whether that's, again, we'll do examples, but cigars, whiskey, watches, artwork.
Collectible Hot Wheels.
Then you're not going to be able to hold those assets in a fund with investors that require that type of a structure and the third-party custodian and the rest of it. But there are and have been forever well-trodden ways of dealing with this problem that have trade-offs, but they are possible. And the key message we'd like to get across in this exposition we'll have here is that the way to make progress on these issues is to follow the rules as written, demonstrate that you can do this correctly, and have investors say, we'd like to participate but are unable to close this gap, and agitate to get changes, liberalization, opening, special exemptions, push people to set up custodians, whatever, so that you can get there. Railing against how it's impossible to run a fund like this when, as we're about to see, it is totally possible and crypto assets aren't even that hard by the standards of this space. That's what's concerning. So please.
So first of all, crypto assets aren't even the most difficult thing to custody. In my experience, there have been way more exotic things that you could custody. So when I only know about Kevin and his fund tangentially. They had I knew that they were onshore, but I didn't know anything much beyond that they were an onshore fund. The thing that struck me as odd was that you would choose to do this onshore because, as you can see with most funds, they would select the offshore route because what's the reason for that? Not every jurisdiction requires that you have, let's forget about qualified custodian, but that you have a custodian to begin with. Usually, though.
So what that means is that you simply have custody of the assets yourself.
Correct.
As the guy running the vehicle.
As the guy running the vehicle. So let's say, for instance, now we wanted to set up a fund in the Cayman Islands, and as long as we're not soliciting any money, or you can't solicit any money anyway from Cayman because it has to be a reverse solicitation. But let's say, for instance, some Caymanian wanted to invest in the fund, you'd have to say no because if you don't have a custodian, you don't have certain facilities available, and more importantly, if your investment manager is not licensed, you wouldn't be able to take any Caymanian
You're
money.
going too deep in lawyer mode.
Correct. Okay. So fine. So basically, long story short, let's say now, for instance, you want to have a fund that doesn't have a qualified custodian under the laws of the United States. You first of all, you do it offshore. You do it in Cayman Islands. Fine. Now, then the question becomes the investment manager. Is the investment manager subject to certain rules that requires them to have a qualified custodian? For instance, in some jurisdictions, what it says is suitable custodian. Suitable custodian just means that don't hold the stuff yourself. Make sure somebody else holds it.
Do the best you can.
Do the best you can.
But there's no license requirement.
There is no license requirement. Some say there are license requirements for these assets. For any other assets, then do the best you can, which is a reasonable approach to it. So like, let's say, for instance, securities, bonds, stuff where there's a very established framework for custodying these sort of things, you make sure that you have a licensed custodian. And then
okay, so let's be a bit more concrete here for people, right? So if you wanted to set up a fund to hold a bunch of weird stuff, could be crypto assets, could be exotic animals or wine or whatever.
Or collectible Hot Wheels.
Collectible Hot Wheels. And you're not interested in soliciting money from public pension funds and retail investors
in
the
US
and Western Europe. How would you do that?
Well, I do it offshore.
No, but you set up a Cayman private fund.
Cayman private fund.
Not required to have a custodian.
Yeah.
You'd stick them somewhere. They'd be in your custody.
Or you could have a custody solution, and you tell your investor about it. You put in you put in the paperwork, and then when you were, if you had U.S. investors, they would be aware of these things. That you make sure that they're qualified investors, which is a term that they use in.
What's non-retail?
Basically professional, non-retail investors, and they understand the risks that are involved. They can afford those risks, and if they sign off on it, have at it.
If the money disappears, you're still not going to get any performance fees, but you're not going to get in trouble with the government for not having a custodian. And if they try to sue you for not using a custodian, you're going to say, here's the investment management agreement, which as long as you followed is okay.
So the thing that grinds my gears is that if you've decided to be in a certain place, then you need to roll with the laws of that place. So if you decided to domicile your fund onshore, then of course you're going to have to...
It's common, for example, to have a fund vehicle onshore and offshore.
Yeah.
And sometimes the mandates of those are a little different because you can do more stuff offshore than you can onshore.
Yeah.
This is not saying that you can set up a fund and hold weird crypto assets in this thing offshore and take retail or public pension or whatever money.
Yeah, no.
There are restrictions, but if you abide by those restrictions for a while and stuff works and you can get the investors to agitate and convince a custodian to take on these responsibilities, it will eventually be okay. And, most importantly, the government is far more likely to be sympathetic to your cause if you do it that way, because that procedure's existed since before we were born,
it's been
roughly
around for a
speaking,
while.
right?
Yeah.
Decades. This was common stuff, offshore trading, 60s, 70s. This is old stuff. You do it that way, then just saying, oh, it's impossible, so we ignored all the rules. We're exempt, or it's just impossible, and we'll just figure out a new scheme. That's not certain investors. You may not be able to take their money, but such is life.
And to be fair, correct me if I'm wrong. There are qualified crypto custodians onshore.
Well, I think the problem was that the wide variety of weird assets people want to trade.
Whatever the case may be.
So then you have a narrow mandate onshore and a wide mandate offshore.
That's what I'm saying. Yeah. So there are actually qualified...
There are solutions to this that exist.
There are actually qualified custodians for crypto assets onshore because obviously the custodians saw that, hey, there might be a demand for this stuff, but let's keep our remit pretty narrow.
Yeah, you have an onshore fund with a narrow remit that is what BitGo can do. You have an offshore fund that only certain investors can do. Gee, this sounds exactly like most global hedge fund structures.
And just to throw your hands up and say that there is no solution, and I mean, it's kind of like going to the book club without having done the required reading.
And because it's so heavily used, those statements will piss off
of
the fund management industry, the regulator, because of course we know how this works. The list of things that onshore custodians versus offshore custodians of the same global banking group will handle are different.
And John's argument, which is not so much an argument as it is stating the obvious, is that, look, if you want to lobby onshore custodians to expand their remit, then maybe what you should do is you should do this offshore first because you know that abides by the rules. Show a long track record, be patient, and show that it works offshore and with all the structures.
Set the vehicle up, show the government you can't raise as much money as you want because some of the investors aren't able to use it, and agitate for some change at that point. That's a hell of a lot better. I'm sorry that it costs you time and money. Welcome to the planet Earth, right? I don't know what to tell you. That's a constructive attitude. Oh, it's impossible. We can't do it. It's just not.
And then falling back to say that, oh, this is all the government going against the crypto bros. Come on, guys, let's grow up.
People have figured out ways to run funds that custody, such as it is, because everybody's got control over physical assets, watches, whiskey, wine. Wine needs to be refrigerated. Wine is a challenging product to keep. It's... You Google for those types of funds, you'll find things. You can read the documentation, right? There are creative solutions to various versions of this problem. Yes, they have restrictions. Once again, such as life.
Like the packaging bubbles on these collectible Hot Wheels, they get crushed all the time. It's not. This is not.
I guess damage on the look. There's probably people that have antique vases and whatnot, and there probably are those kind of physical custody issues. I know there have been problems with paintings being damaged.
Yeah, of course. I mean, if they're not stored correctly, they degrade and stuff like that. So I don't know, man. I mean, this is not a shout out to go look, but I wonder how many funds also use.
Yeah, there's an awful lot of SEC. So you have to file forms as a fund manager, and they declare the custodian, and there are an awful lot of them where the declared custodian is Fireblocks. So there should definitely be some fines coming up on that one, because all the government has to do is query their own database. I assume their database is organized at least as well as my database, given it's their job to administer the program. And there aren't really that many filings. Not hard to find that one.
It's anyway. So finally,
I don't know if that's a Wells notice type situation or if they're just going to email people
bills
you just get. You probably just get
Yeah, you just get fined. I mean, it's not a Wells notice because you filled out the forms wrong.
Well, I mean, it probably is formally, but if you put Fireblocks
okay,
as a
so let's say,
custodian,
for instance, if you had done an application and you filled out the form wrong, usually what happens is the agency calls you up and says, hey, you filled out the form wrong.
So for an S1, so the government does do back and forth on certain types of
That's
files,
right.
but not others.
Not others, and this is one of them that they don't, because the definitions of a qualified custodian are very clear.
If you make a mistake, they just fine you later. Yeah.
Yes, it's the same way. Like if you go over the speed limit, there isn't a whole negotiation about how the next time you're traveling through this zone, the school zone, you should be going at these speeds and blah blah blah.
Actually, on that front, so that's an example of regulation through enforcement where they don't approve your stuff, they just accept it, and then they just fine you if there's a problem. I'm going to argue in favor of that for a moment on theoretical grounds. It's cheaper for the government.
Yeah, it is.
They don't have to run an approval procedure. They only have to worry when something blows up. And if you are one of the people paying to run that government, you might be in favor of running the cheaper solution, right? Regulation through enforcement is less expensive to administer as long as the enforcement, regulatory, legal procedure is fairly efficient than running all these people to read documents and approve them. And
the alternative to that is called Europe.
Well, we've discussed this before, where the civil law system in general and European approaches to regulation.
If you enjoy Europe, outside of just the summer,
generally slower and more expensive to run the program than it is to let people submit forms, sign on the bottom that they're okay, and if you find out later they lost money because that custodian wasn't a licensed custodian, you fine them. That's an inexpensive system to administer. You need a relatively small database, and as soon as somebody shuts down, you just query for everybody else with the same custodian.
Also, regulation by enforcement goes back to the founding fathers.
Well, it's okay. The whole common law, whatever, is different.
No, I mean,
I just mean it's cheaper to
well, it's
accept
cheaper,
the forms.
and it's also pro-innovation. I mean, do whatever you want, and if things go bad,
yeah. No,
you go to prison.
that's fair. I mean, yeah. So
finally, on that note, THORChain.
So we published some stuff on THORChain. This is I find this entertaining. So THORChain is a blockchain, and they have a lot of sort of obfuscation of ownership, mixer-like bridges historically. Well, okay, they connect on all kinds of blockchains, and they have THORSwap, which is a way of trading, and it lets you do sort of multi-chain trading. And the way THORSwap jointly are organized, you can effectively trade native assets across blockchains. It's not a trustless bridge, as we're about to see. There's some extreme violations of trustlessness here, but they have procedures where you can stake, such as it is, native assets in various chains and receive parts of the fees for bridging from place to place, so that you can cleanly swap. And from the end user's perspective, it is a clean swap, an anonymized clean swap of one native asset for another. So here we've just got sort of volumes of flows here. So these are ins and outs, just I think for the Ethereum side bridges. So you see, hundreds of millions of dollars worth of, this is ETH and Tether, USDC, and this forward track token. So these are all deposit addresses. So these are some kind of service that's running, that's just forwarding all the inputs out to THORChain. And this is a huge thing. These are all flows in, and then we get that here. These are all flows out of that. So you can see similarly large numbers of addresses, all kinds of whatever flows all over the place. So these are huge amounts. Right? So it's a busy used thing. So we'll come back to some other data in a second here. What we're going to talk about now is the way the THORChain actually works, before we go and take a look at sort of individual token volumes and see what the problems are likely to be. So THORChain has an admin interface. This is documented in a blog post and some tweets we sent out. And by admin interface, we mean there are hard-coded keys that give you essentially full control over THORChain and anything running on THORChain, including THORSwap. By admin interfaces, we mean in the code there's a list called like admin list, and it just has a bunch of addresses, and whoever has the private keys for those addresses can just affect a huge range of stuff on the platform. Effectively unfettered access to the system. These keys have been updated a couple of times over the few years THORChain's been around, and then eventually, a few years after the launch, they put in some admin control software so that the admin couldn't do everything. In particular, this is very funny, one of the shutdown mechanisms, you can halt the chain, is called Ragnarok. It's THORChain. This is all references to Norse mythology, and they prevented the Ragnarok call by the admin. But this is in 2023. This thing had been around for years at that point. So this is a wonderful example of a system that's just claims to be decentralized all over the place, but you read the code and there's no dispute that if something has an admin interface and is documented as such that can shut down the chain, start up the chain, make all kinds of changes across the chain, that it's a centralized service under that control. They can block addresses. They can do all kinds of things. It's effectively unfettered access into the system. So that's interesting. So now we'll cut back to some of the transfers here. There we go. So these are monthly flows by token. You can see there's a lot of tokens. Again, we're just looking at the ETH data. You can pull this for a bunch of different chains. As usual, ETH has got the widest variety in large amounts. So, the Bitcoin side's got Bitcoin, right? So let's just look at what we've got here. So these are big numbers. Green, I think this is ETH. Yeah, that's ETH amounts, 800 million, whatever. So just for a second here, let's set this to a log scale just so you can see that there's significant. So there's a lot of tokens here, right? And these tokens, these are values at current prices just to sort of normalize it. But you can see there's a wide range of tokens, values in big amounts, small amounts, whatever. Let me put this back on linear scale, and then we'll go back and talk a little bit about what might be going on here. So, okay. And then let's just take off ETH. And then the next two, of course, are USDC and USDT. And this began August 2023, right? So this is about a year this activity has been in place. And if we turn off USDT and USDC, turn that one off. Okay, then below that, you've got, what is this, WBTC. So pull that one. And you just start to see there's other tokens that are appearing here in different amounts. So we get rid of DAI, and then there's just, people have been trading all kinds of stuff. There's a huge range of tokens here. And, these are hundreds of thousands of dollars a month, right? They're not huge amounts, but it's widely used. This thing has been used for laundering hack proceeds. Some of those DAI are North Korean hack proceeds, the FTX exploiter, all kinds of stuff. The system was shut down for a while at one point following hack stuff. So, spoiler alert, we now know exactly how the system was shut down. The admin interface was used to call Ragnarok. Right. I kind of find that amusing. So this was publicly shut down, and there were discussions about, not decentralized, how was it shut down, whatever. And of course, it's been known for quite a while, if you ever read the code, there's just a function the admin could call if they had the private keys to the hard-coded admin addresses that were there for all to see, and just turn the system off, which is what happened. There are also allegations that parts of the team may have taken a bunch of money out of the treasury and whatnot. If that was done, that would have been done through the admin interface, because it could do that, because it could just affect transfers. So there you go. It's kind of amusing only in that, actually maybe we'll pull up some of the code snippets here. We got these code snippets. It's kind of amusing in that nobody seems to have paid enough attention to see this kind of thing. So here we'll just bring up. This is from our own blog post, so maybe that's not the greatest television in the world. But so this is the admin deny list, and this is just functions that were disabled by the admin at one point. All right. And then if we look here, you've got, let's go up to all the way at the top. It's got the thing. It's most entertaining. Here, so hard-coded admin addresses. So there's just a list of admins with addresses, and the private keys to that can do all kinds of stuff, right? And then there's wonderful functions like, this is validation stuff. So this is the handler for admin messages. If you're not a programmer, this may not make so much sense to you, but if you're a programmer, you read this and think, that's the handler for admin messages. The manager just, you go through the code, the manager has access to all the data, right? So this thing can just do whatever it wants. And there are a lot of different, what else we got? Bits of code? Okay. No. Oh, okay. Well, this is what's sort of amusing here in the next bit. So lots of people, we can take that one off. Lots of people had talked about how this was a great, decentralized, censorship-resistant, whatever system that everybody should use. And of course, it was not true at all. And it was never true at all. This has been in the system since it launched originally. It was in the pre-launch. The admin keys were changed repeatedly in August 2020 when the system was first being put together. So it was coded with this from before the launch and was maintained actively for years, and therefore took custody and processed a incredibly wide range of large amounts of flows from all over the place and to all over the place, and in all kinds of tokens that were securities, commodities, payment stable, whatever. I don't know what the company did. Digital assets. So it's amusing. It's a big one. The founder, one of the people, was reasonably well known, and then the other guy was secret for years and doxed himself a couple months ago. So welcome to the doxed community.
And on that note, we'll leave you with that bit. The thinker, just think about it this way. We've gone through some code. We've gone through how THORChain works. And, it sounds complicated and stuff like that. But once you work your way through it, quite simply, this is a centrally administered and controlled blockchain that has facilitated the transfers of millions and millions of dollars worth of stablecoins, tokens, and stuff like that for some not very nice people. Maybe there are nice people. Yeah. Maybe there are nice people. I don't know.
There's very nice people on both sides. Is that where we're going on this one? All right.
So, is that a problem? I don't know. If you ran perhaps a money transmitter, which
might be an issue,
without a license, and did the same thing, I think there would be people who might want to have conversations with you.
And this is particularly amusing in that while the marketing materials claim that it was all decentralized, it's not like you have to make a complicated argument around the project structure. There's a list of admin addresses. There's a thing labeled the admin interface handler, and then there's just a bunch of functions like is admin, and then code that says if not is admin, return error, if is admin, execute command. You don't have to be a programmer to understand that code. The functions are well written. Whoever wrote this and documented it, you did a great job.
I appreciate the comments.
You did a good job.
I appreciate the comments because it's well commented out. These are the admin addresses, so there's no ambiguity when it comes to these things. Mm-hmm. So as a non-programmer, I appreciated the transparency when it came to that code because it was incredibly easy to read.
And the one person who responded on Twitter making an appropriate German joke who clearly got all of the Götterdämmerung, etc. stuff. Thank you.
You made it there.
Django Unchained is a remake of Wagner's Ring Cycle, and since this thing's about Thor, I thought that was a good way to do it, to figure out if anyone in this community has any kind of a classical education at all, and the answer is one guy.
Well, there might be others.
He questioned if that was obscure, and I managed to produce mainstream newspaper stories from when Django came out about how it was Wagner. But anyway, maybe Quentin Tarantino's watching; he'll respect it.
So on that note, have a think about that one. It's not in us to usually dish out homework at the end of the show.
It's not our Gestalt. Come on, we're gonna do this in German. We'll do this in German.
It's not our Gestalt to dish out homework, but just have a think about that for a minute. Even if you're not involved in any of these things, have a think about it. Does that seem reasonable to you? Does that seem like something that maybe somebody with some three-letter agency might want to have a conversation with you?
Well, the founders in Australia were, it's actually 4 letters, but all right.
Yeah. So on that note, have a great weekend. Well, we'll see you again next week. Thank you for tuning in. Bye-bye.